But I think this like kind of like reinforces my point, which is like, I say like 3 nice things about Ripple in like a couple of tweets. And like, there was like some publication that wrote about me as like, oh, DeFi OG Robert Leshner becomes like Ripple stan.
Not a dividend.
It's a tale of two quants.
Now, your losses are on someone else's balance sheet.
Generally speaking, airdrops are kind of pointless anyways.
Unnamed trading firms who are very involved.
I like that ETH is the ultimate Ponzi.
DeFi protocols are the antidote to this problem.
Hello, everybody. Welcome to the Chopping Block. Every couple of weeks, the four of us get together and give the industry insider's perspective on the crypto topics of the day. So quick intros. First, we got Tom, the DeFi maven and master of memes.
Hello, everyone.
Next, we've got Robert, the crypto connoisseur and czar of Superstate.
GM, everybody.
And back on the show, we've got Laura, CEO of the show.
Hi, everyone.
And I'm Haseeb, the head hype man at Dragonfly. We are early stage investors in crypto, but I want to caveat that nothing we say here is investment advice, legal advice, or even life advice. Please see Chopping Blocks at XYZ for more disclosures. So it's a pretty historic week. Bitcoin has finally crossed 100K. We are now officially in 6 figures. Okay, yeah, let's get the little clap around.
Let's do our Vitalik clap.
Oh yeah, the little one. There we go. Little clap.
There we go. It was a little funny because Bitcoin crossed 100K. Everybody celebrated. Everyone had all their like 100K content ready to go. So Coinbase had this amazing video of this guy who had recorded a video in 2013 when Bitcoin first crossed $100, and they brought the same dude to come back out and record the exact same script and sequence, but with it being 100K and him being 10 years older. And then the next day, Bitcoin went down below 100K, came down to 96, and then now it's back up 100K. So I think I'm not doing the celebration again. I feel like, okay, Bitcoin's at 100K. Let's just all agree to not sell below 100K anymore so that we don't have to do this again. In addition to, so Bitcoin's been up about 35% in the last 30 days. ETH is up about 50% in the last 30 days. So ETH seems to actually be outperforming Bitcoin. And Sol, weirdly enough, and much to my surprise, is only up 28% in the last 30 days. Only. Well, so here's why that's so notable. So beyond just Bitcoin hitting all-time highs and getting into the 6-figure club, there's been a number of other tokens that have pumped like absolutely bonkers in the last 30 days. So these have been often called the Dino Coins, because they were coins that were very popular in previous cycles. Some people call them the boomer coins. So some of the coins that have pumped like crazy in the last 30 days, XRP is up 338% in the last 30 days. Tron is up 94%. Hedera Hashgraph, the token is HBAR, is up 500%. ADA, which is Cardano, is up 242%. XLM, which is Stellar, is up 390%. You've got things like IOTA and Dash that are pumping like crazy. So there's been this kind of Dino Coin Renaissance that has gotten a lot of people thinking like, oh my God, is this really what it looks like when retail comes back? Is they pick up all the old coins they were buying and they pump them up like crazy. So it seems like the things that are beloved by this cohort of crypto investors, of the Solanas of the world and the things that people are looking at and say, wow, this is really gaining a lot of steam and it's got a lot of real adoption and traction. These have actually underperformed this month relative to the Dino Coins and Ether and a bunch of other stuff that probably was recognizable to people from the previous cycle who maybe are coming back in. So want to go around the horn, get your reactions to, first of all, Bitcoin 100K, and then second, the Dino Coin Renaissance. How does this strike you and where do you think this is going? Is this what this cycle is going to end up looking like? Laura, let's start with you.
I mean, so I have a couple of thoughts. So first of all, as you mentioned, this always happens back when it's kind of more like a peak and it's a sign of retail coming in. And by that, unfortunately, what we do mean is people who aren't really in the know in crypto. Silly things like unit bias, I think, play a big role in these types of rallies. But what's interesting to me is
Laura, can you explain what unit bias is?
Oh, just that, for many of these coins, like the prices are just really low per unit. And so I can't remember who tweeted this, but I saw some tweet where somebody was like, oh, I just watched a TikTok video where basically this person went, onto, I forget what exchange, but, they went on this exchange and they showed how they were going to buy a coin. And in the video, they were like, oh, well, Bitcoin is really expensive. And so they just kept scrolling until they went to like the bottom of the chart where the like quote unquote cheap coins were. And of course, I don't know what they bought in the video, but it was something where, yeah, it's not something where crypto people that are in the know actually think it's like going to be valuable. And this person was like, this is cheap. Therefore, I'm going to buy, like whatever, 10,000 of that, or, whatever. I don't
You
remember.
mean like 10 billion of them because they're like point.
Yeah, exactly. But that's how those people think, where they don't really understand the technology or like what makes any one of these coins valuable. But what I was going to say is, so like in the past where these tended to happen like at the peaks, I actually don't, and I'm not saying that we're not going to have some kind of a peak here, because I do think the trend typically is that in the fall is when we get more of a peak, or at least maybe at the latest into January, and then after that it kind of might go down a bit. But the point is just that, like, generally this whole cycle has been very strange and different from all the other ones. It was like the ETFs kind of kicked things off even before the halving. And, traditionally, I think the other ones tended to have some kind of a technological driver that drove the run up. And so in this case, I guess you could say it was like ETFs and then meme coins, which I'm not sure if there's any sort of technological, driver to that. So anyway, all I'm trying to say is that it just feels like, in a way, the ETFs kind of brought in a bunch of money that probably should have come in earlier if the SEC hadn't sort of like artificially prevented the launch of the Bitcoin and Ether ETFs. And so anyway, so all I'm trying to say is that, yes, typically that would be like a sort of top signal, and it might be, but just because of the way this cycle has played out, I'm kind of wondering, like, doesn't it sort of feel like we could probably run more next year? Am I wrong? Like, what do you guys think about that?
Yeah, well, I'll preface by saying that I am not an expert at these things. If I were an expert at these things, I'd be running a Bitcoin trading hedge fund or something instead of being on a podcast. So, take any predictions.
Or both.
Yeah, take any predictions I make with a grain of salt. But, personally, I feel like, 100K is a very nice milestone, but that it's a small milestone on Bitcoin's greater journey. And, when you look at why has Bitcoin been rallying, it started pretty much on the day of the election with, Trump's victory. And it's because of the expectations about what it means for the US, but also the entire world when it comes to Bitcoin. I mean, there's already talk of not only, all of the accommodative and pro-crypto cabinet and agency picks that he's making. It's not just, a huge number of pro-crypto folks getting elected to the House and the Senate. It's, the drumbeat of conversations that are increasing about things like, how does the US manage its Bitcoin stockpile? Does that evolve into being a strategic Bitcoin reserve? Things that would have sounded crazy 2 years ago. How is the US government buying or managing Bitcoin? Is now the mainstream conversation. And, it's kicking off conversations at other sovereign levels about like, what is, each other country's approach to Bitcoin as a strategic asset. And I think in a lot of ways, it's beginning this global game theory domino of respect for Bitcoin at a geopolitical level. You're seeing it in, Jerome Powell making somewhat, supportive comments just like 2 days ago, which is what kicked us over 100K. You see it from Wall Street chiefs, in their remarks, showing respect to crypto. Like, all of a sudden, this is an asset class that's being taken seriously at the highest levels of power. And when you look ahead to what that means, if you play out the game theory, if you play out the domino effect, if you play out all of that out, there's a plausible path at this point for Bitcoin to reach gold-like valuations, right? And that's not unreasonable. And so, I think in a lot of ways, this rally is different. I think there's going to be a lot of fits and starts to it. I think like in a lot of ways, it might be like a multi-year rally that's extremely volatile as, the probability of these huge events, occurring, seems likely and then unlikely and then likely. Like, this might be an extremely rocky ride, but I don't think this rally is over because the inauguration hasn't even happened yet. The session of Congress hasn't even happened yet. Like, the conversation is right now limited to a very small group of, industry folks who spend all day in this. Like most of my normie friends have no idea, that Trump's even pro crypto, and so, I think the real fireworks happen next year. And I think this is a small, piece of it.
Tom, what's your take?
I think the point on sort of the legitimization of the asset class is real. Like, I think it's always hard in the moment, but if you zoom out, like there's been such a insane Overton window shift in terms of like the acceptability of Bitcoin. And now it's almost like a default, right? It's like, of course, you're going to have some exposure. The question is, how do you choose that exposure and how much? And like that was not even on anyone's radar, 6-7 years ago. Like it was a fringe alternative asset for like tech people and kind of weirdos. And now it's like, yeah, this is part of your portfolio. It's being addressed at sort of the sovereign level. I think for the Dino Coin thing, I agree. I think it's also like everything kind of like the pipeline. It's kind of like Laura was saying, it's people pull up Coinbase or maybe CoinMarketCap and they look at what's cheap. And I mean, obviously crypto is weird in that you can buy stuff highly fractionalized in a way that you can't for, equities, for example. You can't buy like a, fraction of a piece of Apple stock unless you're using like a fractionalization service, but that's a separate thing. And so people are like, what can I get for $10? And the answer is you can get a few XRP for $10. You can't get, a Bitcoin for $10. And I think that that's part of it. There's also this kind of rumor, which I don't think is true, but I thought was kind of funny that Trump was going to make no cap gains tax for crypto that was made in the US. And I think a lot of these Dino coins are like sort of original, some of them US based teams. And so it's kind of like, yeah, if you want, no cap gains on your winnings, you got to go domestic, got to go onshore.
Wait, by the way, you guys, did you see this Gort tweet, which I just have to quote? It was so funny. I thought he said, I asked a Ripple holder why I should invest in XRP. They said, imagine being able to invest in Swift. To which I said, okay, why would I want to invest in Swift? And they said, do you know how Swift works? And I said, no, do you know how Swift works? And they said, no. And I was like, oh my God, that is like a really good description.
Okay, hold on. So, Robert, you have been out there on Twitter defending the honor of XRP. I've also heard that a lot of the demand for XRP is actually institutional, not just retail, although obviously retail is also buying XRP. XRP, so it's important to understand also when we talk about this rally for XRP, XRP has now flipped Solana and Tether to become the third most valuable cryptocurrency. On a fully diluted basis, there's over $230 billion of fully diluted valuation for Ripple, for XRP, about 140 billion, I believe, circulating. Massive rally, huge quantity of capital. Multiple days, XRP traded more volume than Bitcoin itself did. So, Robert, give us the steel man, give us the bull case for XRP and why you're interested in what's going on in that ecosystem.
Sure. So, interest follows price. Like, I'll be honest, as of like 2 weeks ago, I was not very interested in Ripple, right? Because of the appreciation of the asset.
A TikTok that you watched? Oh, okay.
No, I was about to say from 50 cents
there was
to
some guy scrolling down CoinMarketCap.
No, I don't have TikTok. I'll be honest. The propaganda about it being a Chinese app, I don't use TikTok. Anyway, so, because of its 4x rally as like a large cap asset rallying 4x in a short amount of time, I mean, it draws attention, right? And, I decided to dust off, my computer and go and see what I could actually like experience on the Ripple ledger, not blockchain, the Ripple ledger, because I hadn't used it probably since 2013 or something like that, right? Like that was probably the last time I'd done a transaction on Ripple. And I think even then it was like some test transaction of like send one Ripple, somewhere. Like I never actually used it. And so, for me, I basically decided to like spend a weekend, reacclimating myself with the blockchain. I've been an Ethereum person since 2017 for the most part. Like I'm not a maximalist, but like most of the activity as users on Ethereum, all of my building as a builder in the space has pretty much been on Ethereum. And so for me, I've been basically living in a bubble, for a long time. And so this was just an exercise in, user experience and trying something new, but I decided I was going to use Ripple and like get in the weeds of it and get deep in it and like see what's changed in the probably 11 years since I'd used it last. And my interest in it came from the perspective of DeFi. I mean, at this point, I'm a DeFi guy in a lot of ways. And so I basically want to see like, where's DeFi at? Because like I've been seeing some tweets about like DeFi is coming to Ripple and all of this stuff. And so, I got to sort of like play around. I bought a couple XRP on Coinbase and sent them to a Ripple wallet that I'd created. And I was like going to explore the chain. And, to my surprise, they've actually started bringing a lot of DeFi like concepts to the Ripple ledger. So, Ripple has, since I last looked 11 years ago, has natively integrated AMMs into the logic of the ledger itself. It'd be like making like, an AMM a first class object in the Ethereum blockchain that's like, hard coded. Like they've hard coded AMMs. Basically Uniswap V2, with a couple bells and whistles on top, like really interesting ones. Like, how do you have AMMs without any governance, like for like fees or like creating new pools or like, anything like that? There's not smart contracts to create the AMMs. They're just native objects. But they built in these interesting things like tokenless governance of the AMMs, where the LPs do governance to set fees. Like, and this is all like native in the ledger. It's really quite cool.
I mean, it sounds like osmosis or something.
A little bit, yeah. Yeah, and on top of that, like they've basically built a Web3 like stack, when it comes to like interfaces and when it comes to wallets and when it comes to interacting with it. In a lot of ways, it feels like DeFi on Ethereum circa 2019, where you have primitive interfaces that you can interact with AMMs on, right? Provide liquidity, like do all these things. But they don't really have good generalized smart contract programmability yet. There's a lot of hope that they can bring that in with a sidechain to Ripple, the Ripple EVM. And so ideally you can, move an asset from Ripple to the sidechain in one transaction. It does DeFi things, whether it's like using as collateral to borrow some other Ripple asset or, doing a more complicated trading operation, and then come back. And the goal is to get, to a place where you have the EVM like in Ethereum or like any of the Ethereum L2s, but integrated, completely into the Ripple ledger. And so, for me, this was, a fun process. I learned a lot. I got to see some of the nice things about it. I personally am a little bit like, I have chain biases, right? Because for the most part, I'm an OG who's been a part of the Ethereum world. So I sort of like.
So I saw a tweet from Kane where he mentioned the reason why many people don't acknowledge the presence of XRP in the DeFi universe is because of chain racism. Can you define what chain racism is?
Yeah, so chain racism is this inherent bias against a chain for really like no good reason. And oftentimes if you spend the time to actually explore it, you might like it a lot. And so I think a lot of people in the ecosystem are chain racist. They have biases for no good reason. I think oftentimes they don't even know why they, feel a certain way about a blockchain,
So Robert, would you say you're pro chain social justice?
Yeah, I'm not really a woke person, but I am 100%.
Okay, but in this regard, yeah.
In this regard, I'm all about blockchain social justice. Like, I think people need to wake up. I think they need to, be more open-minded. I think they need to try new blockchains. Like, they should get their hands dirty. They should see what they can, build. They should see what the experience is like, the transaction process, and it might be educational.
But Robert, I have a question. Do you feel that development of Ripple is decentralized?
No.
Oh, okay. Well,
I don't think development of Ripple's decentralized.
Shouldn't that be what like DeFi is though? Like, isn't that?
Laura, that sounds kind of chain racist.
Yeah, I know the definition.
No, Laura, you are showing some of your biases here. Like you're like anti-Ripple. I mean,
Laura,
no,
check
but
your,
wait,
check
but
your
isn't
chain
that
privilege.
Am I wrong that like, are you being snarky, Robert, or are you like being real? Because
no, I'm not being snarky.
Robert is never snarky. Excuse me.
Yeah.
But the definition of DeFi is decentralized finance. So you think it's okay that it's not decentralized?
Well, I think there's a lot of a spectrum, right? So the Ethereum blockchain is a ledger that you can at this point have an incredible confidence that the transactions are censorship resistant, tamper proof, and will do what they're supposed to do. There's other concerns like MEV and how like transactions get processed, but like for the most part, you can have a complete confidence that the transactions will get validated correctly, right? And there's not going to be a double spend or there's not going to be an error, right? At this point, and the transaction level is incredibly decentralized and sound. Ripple as a ledger is centralized, right? Like, I don't think there's anyone out there that's saying it's a decentralized ledger. You really have to trust Ripple a lot more than you have to trust, the Ethereum community of validators. But DeFi is not just the transaction validation. It's also everything built on top. And in a lot of ways, like a Uniswap V2 like AMM with like no governance, is more, trustworthy because it's more trustless than something that requires like a, very active governance process. There's so many different vectors of centralization and decentralization and like what you can trust and what you cannot trust, that I can see situations where you might trust a certain DeFi application on Ripple far more than you would, some other type of DeFi application on Ethereum, right? And so I don't think it's an oxymoron. I think you can get to decentralized financial activity that works the way you want it to work, even on Ripple, where the validation of transactions is centralized.
And one other question, because I just looked up the Electric Capital developer report on this. So they're saying there's 166 monthly active developers. And even like Cardano, which I know is also a blockchain that people kind of lump in with XRP or Ripple, that has 635. So even that community is like quite a bit larger, but Ripple's been around even longer than that. What's your take on that?
My take is, they don't really even have full smart contract programmability yet. So why even be a developer yet? Like, I can't even fathom what a developer up to this point would do building an application on Ripple, like for the most part. So, I think they'll get there, right? I don't
They need another 10 years.
Yeah, I think I have like 5 XRP. I'm not speaking as like a big XRP guy here, but
you
certainly sound like a big
XRP guy. The way you're defending it on the show, I
can't believe we've been talking about XRP for the past 10 minutes.
Someone has.
I will say we've done way more content now that Bitcoin's at 100K. It's like Robert explaining XRP to Laura. This is
the chopping block is an ivory tower podcast. Okay? We need to get out of the ivory tower.
I'm just saying this one. We're getting 100,000 views on this episode. I'm telling you.
We're going to rebrand it the chopping dag next week. Actually, we're going to do.
Yeah.
I mean, and I don't want my questions to make it sound like I don't ever think Ripple could get there, but like some of the jokes we're making, they've been around for a long time.
Hold on, guys. We got our IOTA segment coming up next, so let's move on.
Cardano after that. I mean, but like
then we do Cardano.
But I think this like kind of like reinforces my point, which is like I say like 3 nice things about Ripple in like a couple of tweets, and like there was like some publication that wrote about me as like, oh, DeFi OG Robert Lesher begins a Ripple stand. It's like, this is the level of like, experimentation and like mutual, understanding that we're at right now, where if like an Ethereum person says anything even vaguely pro Ripple, they're like a Ripple person all of a sudden, right? And it's like, we have these like incredibly like divided camps of, crypto allegiances. And it's like unfathomable that like, you can support another ledger or another blockchain. But it's like, I think there's some interesting things in Ripple. I think there's some interesting things probably on Cardano. I'll be honest, I've never used Cardano. I don't have a wallet. Maybe like 2 weeks from now, I'm going to get a Cardano wallet and test out what's on their chain and be like, I'll write a couple of nice tweets about Cardano and everyone will freak out. But I think there's something positive to learn about from almost any blockchain. Like there's got to be something that they're doing unique that's right, amongst all the things that different chains are trying in their quest for relevance that are worth learning from.
Yeah. And like I said before, I don't want to make it sound like what you're doing is a bad thing at all, because like, if there's anything I love about the crypto community generally, it's that people are very open-minded. They're very like early adopters. They kind of like see the future well before it happens. They just are people who like, I feel like that's a certain kind of intellectual quality where you can like see a spark in something and play it out long into the future and like see that future before other people can. And so that's why, I would never say like you should be 100% certain that like certain chains are never going to work out or whatever. And I do think that sort of like intellectual flexibility comes with, the ability to even see the value in crypto, like, back in 2014 or whatever. But I do still think the questions that I was asking were valid. So
Because I
feel like that
think
was
you're a little chain
was-
racist against Ripple. Yeah.
Yeah, that was a long-winded way of saying, guys, I have a lot of chain friends that are, like I'm not chain racist. Okay, all right. Let's move on. Let's move on. We've done our XRP segment. So I want to talk a little bit about the regulatory side and what's happening now with Trump's new picks to lead part of his administration. So we've got some really important names that we need to work through in terms of understanding what this next 4 years is going to be looking like with respect to crypto regulation. First up, Paul Atkins. Paul Atkins was nominated as the new SEC commissioner. He was actually a former SEC commissioner under the Bush administration. He was co-chair of the Token Alliance. So he's actually been fairly positively inclined towards crypto. He's been pretty active in the crypto industry, especially on the Hill. He's an advisory member of the board of Securitize, as well as a few other crypto projects, including Reserve, which is a decentralized stablecoin. Hester Peirce and Mark Uyeda, who are currently SEC commissioners, were actually staffers for Paul Atkins. In general, he's, as far as people can tell, he's very in favor of loose crypto regulation, does not like regulation via enforcement, and everything that he said so far publicly about crypto indicates that he's very much on the side of laissez-faire, taking a step back and being more chill with respect to the current stance that the SEC is holding. All that being said, it remains to be seen what he's going to do with the current set of cases that are still in flight, whether he's going to drop them, whether he's going to push for some kind of, light settlement, or whether some of the cases that are close to the finish line, he'll just let them finish to their terminus. But at least what most people are projecting with Paul Atkins is that he's going to be much more pro-crypto. And, when Trump announced Paul Atkins, he said specifically in the announcement, Paul Atkins is going to be pro-crypto. One more name I want to throw in the mix is David Sachs. So David Sachs was appointed just yesterday to be AI and crypto czar. So now this, of course, is a new role. We have not previously had AI or crypto czars. David Sachs, of course, is host of the All In podcast. He was formerly part of the PayPal mafia. He was COO there. He's now founder of Craft Ventures, built a company called Yammer, which he sold to Microsoft. He's been an investor in a number of crypto projects. So famously, he's a big investor in Solana, which weirdly did not pump on the announcement that he became crypto czar. But he also was investors in a number of projects, including DYDX. I remember he was involved in something called Anchor, which was like a security token project a while back in like 2017, 2018. So he's been definitely around the hoop with respect to crypto, and he's been pretty outspokenly in favor of a pro-crypto legislation happening in the US, as well as in favor of Fit 21 on the All In podcast. So he's now going to be cryptos are, again, unclear what exactly that is going to mean, but largely my assumption of what cryptos are means is that he's the person Trump is going to be calling when he asks, like, hey, what do I do about crypto? David Sachs is going to give the answer. Lastly, we've got Scott Bessent. Scott Bessent is going to be Treasury Secretary. He's also been pro-crypto, although not nearly as involved in the industry, part of the PayPal mafia, hedge fund executive, and according to Brad Garlinghouse, CEO of Ripple, quote unquote, the most pro-innovation, pro-crypto Treasury Secretary with strong ties to the tech industry. So that's the lineup we have, all very strong picks with respect to their stance toward the industry. And I think that's part of the reason why we saw Bitcoin being propelled up above 100K. So it looks like we're going to be in for a very pro-crypto 4 years. Robert, as the regulatory expert, what's your take on this lineup? And any of those three names that jump out to you the most?
Well, first off, I'm going to disclaim the title of regulatory expert. I'm a regulatory amateur, but maybe compared to some people, I know more. Anyway,
all right, fine.
Just to speak about these three positions, I haven't, met Paul Atkins. The people I've spoken to speak about him in reverence. I mean, like, he's unbelievably respected by those that do know him. I've friends that have interacted with him, and like they all speak about him, with reverence, as this guy, being phenomenal. The views that I've seen of his on crypto are fantastic. The fact that he's been, around for a while, like in the space, not necessarily super actively, is fantastic. And, most importantly, from the perspective of being chair of the SEC, he, I think, has an institutional experience that's going to bring credibility and respect back to the agency that's been damaged. And, I think in terms of, picking the right candidate, from what I understand, like Paul Atkins will be the right person to sort of like change direction of the ship from one being that, that attacked crypto aggressively in the US to one that, can navigate, swinging it the other direction, that being neutral or positive or like open-minded about how to use a new technology, and can do it in a way that, most likely works well with all of the other staffers of the agency. He's not an SEC novice. He's as much as it gets, an SEC, veteran. And so I think he's the absolute perfect pick for the role, and highly optimistic. When it comes to, David Sachs, like I have interacted with him, I can say from personal experience, he's great. He's knowledgeable about crypto. He's knowledgeable about AI. He's knowledgeable about the venture stack in general. I think the czar role is, a little bit of a policy role, as I understand it. I think it is yet to be seen, like what that role specifically entails, besides sounding really awesome. Whether that's navigating the sort of relationship between the executive branch and the legislative branch, and coming up with a unified policy. But, whatever the role winds up being and what he's supposed to be doing in the role, I'm excited about it. I think we have someone with a lot of hands-on crypto experience in that role. There's candidates that would have had more hands-on crypto experience, right? The person with more hands-on crypto experience would probably have less AI experience, and vice versa. I didn't know.
And might also have less credibility on the Hill.
Yeah. I didn't know, that this was going to be an AI and crypto czar role. I think a lot of people heard that there was just going to be a crypto czar as a role. And in thinking about that role in people's heads, like the short list of ideals candidates were different. It would have been people that were exclusively crypto for the most part. But I think because the role is an AI and crypto role, that David Sachs is a fantastic pick. I mean, like, I can't see that many people that would be a better pick for that role. I mean, he was an early supporter of Trump's as well. I just think he'll be able to successfully navigate what that role needs to be. And I think he'll write this sort of like job description of that role and what it does, because we've never had one before. And lastly, on Besson at Treasury, I mean, he's, unbelievably respected by Wall Street. I think that's one of the most important pieces of this, is knowing that there's someone that Wall Street trusts in the role, because I think, Trump is going to be proposing somewhat complex, policy here. Like a tariff-based policy is really hard to implement in the modern era of extremely intertwined economics. Like, the Treasury Secretary is going to have to sell somewhat novel ideas to the world, right? Whether it's moving to tariffs, whether it's changing, the structure of taxes and how they work, whether it's a strategic Bitcoin reserve of some kind. I mean, whatever it is, he's going to have to sell that to Wall Street and the Treasury market. And it seems like he's an unbelievable pick for it. Is someone I have not met, and I don't really have too many second degree connections, so I don't have that many personal, anecdotes about him. But, from a distant perspective, he seems like a great fit as well. So I'm pretty happy about all of those picks so far.
Nice. Tom, let's get your reaction. SEC, Crypto Czar, and then Treasury.
Yeah, I'm gonna defer to Robert on SEC and Treasury picks. It's not really my area of expertise. I actually thought Sachs was kind of a strange pick for the AI and crypto czar, and then I think the more I've kind of digested it, the more I've also kind of come around to Robert's point of view, which is you need someone who hits on all these different variables, and you also want somebody who is in Trump's camp for what is kind of an unofficial role. And there's aren't that many people who check those boxes. I think my worry for the crypto czar initially was that they're going to pick someone who lacked credibility, just some crypto insider, and it's who is this weirdo that is going to
some random executive we've never heard of.
Yes. Or it's going to be someone who's just a total maxi, and they're just Bitcoin reserve, everything else is kind of scammy or whatever. And I think Sachs actually kind of threads that needle pretty well. So, and he's also just obviously a very smart guy. So, I've actually come around to him as a pick. I think it seems great.
Laura, what's your reaction to those picks?
Well, so I'll just start with David Sachs. We came out with a story today where basically when this news broke on Thursday night, my new regulatory reporter, Veronica Irwin, who's amazing, found out from all of these, sources that she's in regular contact with, they were all kind of blindsided. Nobody knew that, they all thought that it was definitely going to be just a crypto czar, not a combined role. And the people that had kind of been the names that had been circulating amongst that crowd before the announcement of David Sachs did not include anything like David Sachs. And interestingly, a lot of the discussion centered around the fact that this new crypto czar role would be, something that hadn't existed before, but kind of like understanding generally how those types of roles work. It was thought that this role probably could not own crypto according to, I think it's like the Office of Government Ethics or something, some rule that they have. And so the names that had been floating around were not like, they weren't like bad or anything. They just weren't who the crypto industry would probably put forward because of what they thought had to be this rule that they couldn't own crypto.
Wait, what were the names that were being floated?
So Chris Giancarlo was one, who's the former CFTC chair, crypto dad. Another one is actually Ron Hammond, who is not as well known. He, forget his exact title, but he's at the Blockchain Association and he's pretty young. And I think he, in his role as a lobbyist, maybe had an eye on like doing something in government at some point. So he, even though he's very much, super into crypto, can talk very fluently about it, he actually, I think, had never purchased crypto because he kind of knew someday he might. I don't think, when he started, I don't think even this notion of a crypto czar even existed, but he just kind of knew
That's
at
so
some point I
bizarre to
might,
me.
want to do something in government. So, but there just were so few crypto people that didn't
Well,
actually
Laura,
own.
sorry,
Oh,
can I interrupt? Do you
Yeah.
do you own crypto?
No,
I realize I've never
no.
asked you this. You
Well,
don't own any crypto.
No. So that I'll
Can I
just
give
explain.
you one ether so you now own crypto?
Well, okay,
What,
so-
have you ever owned crypto?
Valued in ether?
Okay, so I've explained this multiple times, but people, don't always remember. So here's the deal. Back in 2015, when I first got into Bitcoin, I did buy several Bitcoin, and I don't remember when I did, but I later also bought some Ethereum, and then. And I was initially freelancing at Forbes, but then later when I went full time, their policy was if you write about something that you own, you just have to disclose it. That's it. But
Just like we disclose things on this show, please see choppingblock.xyz for more disclosure.
yeah, but you're known as an investor, right? Whereas like when I quit Forbes full time, I then wanted to be able to write for any publication. And literally the very first publication I ever freelanced for was the New York Times. And they definitely would not let you own something that you write about. So at that time, I was like, oh, I'm realizing this is going to be an issue if I ever want to freelance because there's like a whole bunch of publications where that would be the rule, not the disclosure rule. So I was like, oh, I actually should get rid of all these cryptos that I have because it's going to make my life as a journalist difficult. So I did. But honestly, sometime in the last year, I was thinking like, oh, this is kind of silly that I'm doing this because honestly, what happened was when my book came out, I was supposed to write like an opinion piece for Wired. Like, when you write a book, like frequently you'll write little things for other publications. But they ultimately like wouldn't let me. And they said, well, you have a publication that takes sponsorship money from crypto from crypto companies. And I said, oh, but I am a subscriber to Wired. And if I look at my magazine, all of the ads in here are from tech companies and you guys cover tech as an industry. Like this is how so many publications work. Like that's just a normal way that, like you can cover an industry, but then you also serve up ads that your audience would be interested in. But yeah, they wouldn't let me. So then anyway, so the point is in the last year, I've been thinking like, oh, this is silly. I have my own publication. I should probably start buying my own crypto. But I've said this multiple times. I have a lot of health stuff going on. My whole life is full. It's like full with work, health, and like that's all I have time for. So I have not actually gone about buying crypto, but I will probably change this rule for myself. And then the last thing I should say is that my company did buy some Ether and Sol, I think, for different like things that we have to do that involve our reporting. But that's like company money, and it's not to enrich ourselves. It's just because we actually have to use it for our work sometimes. So
I would just say I had no idea that you didn't own any crypto. That is absolutely bizarre to me. I mean, I thought it was bizarre to hear about like somebody who's lobbying for the crypto industry who doesn't own any crypto. But I'm like, okay, if you have political ambitions, maybe I get it. Like crypto is like your pet issue that is on your roadmap or whatever. But I'm like, you've been along for the ride every fucking step of the way, and you're just like, everyone's telling you about these tokens that are going up 100x or whatever, and like people having life-changing economic outcomes, and you're just like, oh, cool, I'll just write about that and talk about it.
Well, yeah, but I mean, I've been a journalist for, whatever, like 20.
No, but you quit, but you like left your publication to like start your own business to go all in on the crypto industry, growing in importance. Like it's not like you're just like, well, I'm just a journalist, whatever, who cares?
No, but that is it. I mean, like just so you understand, like the reason why I love what I do is because I literally love covering crypto as a journalist. Like it's definitely the most fun I've ever had in my entire life in my career. There's no question about it. And so like,
okay,
I get so much joy from that. I'm not saying that like I'm completely like, immune to the notion that, oh, it might be nice to like make some money from this. It's not like it's a little bit secondary because first of all, I definitely make better money than most journalists. And second, I'm having so much fun doing this. And third, like I said, for me, it is more important to be able to write for like any publication. It's just that even though I am not owning any, some places still won't let me write about it for them. That's why I'm like, well, this is stupid. So anyway, yeah, that's okay, why
sorry.
I will probably
I sidetracked you. Yeah. I sidetracked you tremendously. Finish your thought about the regulatory picks.
Oh, well, So basically, it was surprising to my reporter and myself that the whole crypto policy community was like kind of blindsided by the nomination of David Sachs. Like they didn't seem to know. They didn't even realize they were going to be combined. But on the flip side, but I don't think it's a bad nomination at all because I mean, we've all seen like stuff with Goatsy and just like AI 16C, like all these things with crypto and AI coming together. You seem
those are your two citations.
Yeah, I mean, you could own those without being conflicted.
That is very true. Maybe that's a way to start building your crypto allocation is through, as you call Goatsy.
Yeah. Well, I don't know. They were, Goatsy, I feel like was the first one that really took off. I could be wrong.
Oh, don't call it Goatsy. Just call it Goat, please.
Okay.
Just call it Goat.
Anyway, the point is that because, he obviously saw that was going to be a thing very early. I feel like that just says a lot about kind of like his ability
David
to
Sachs?
Yeah. People
you knew
have
that Goat was going to take off?
No.
He saw the Goatsy. He was able to see.
You guys,
oh God!
No.
We're gonna stop talking about it.
He had a tweet that people.
She started it. It wasn't me.
He had a tweet that people were sharing from. I forget what year it was. Was it 2017? Did anybody see this tweet?
I think I saw it where it's about AI agents paying each other, microtransactions, crypto. Yeah.
Exactly. And it's from,
when was this?
Yeah, 7 years ago.
It was like 2018. Yeah.
I forget how many years ago. But so yeah, I don't know much about him. I think most of us would say, okay, he is not anybody who's been like core in crypto, or at least not had that kind of visible presence. But the more I learn, I'm like, oh, okay. Like I think he understands this. Paul Atkins, I think, is excellent for SEC chair. As has been mentioned, he is not a regulation by enforcement person. And what Cody Carbone of the Digital Chamber said on my show today was that about the enforcement actions, he would guess that Paul himself is actually already looking at what's happening, just from the full gamut, like what's been sent out in terms of Wells notices, like what's actually already in the courts, what are the stages of everything and like what are the arguments being made, like blah, blah, blah. So he's probably already trying to figure out what to do when he arrives on day one. Cody's bet is that he's not going to just come in on day one and be like, all of this ends, like every single piece of litigation is over, because he said that will not win him fans in his own agency. So it'll probably, be some kind of more reasoned approach. But one other thing that we discussed is, I don't know if you guys saw, John Reed Stark tweeted that basically in recent weeks, Gary Gensler elevated a few senior staff into enforcement and trial positions that are like people more affiliated with Gensler. And these are permanent positions. They like can't be undone. They would typically be announced, but he did not announce them. And so John Reed Stark said something about how this would be like Gensler trying to lead from the grave. So we'll have to see what happens with that.
You're saying the deep state is real? Gensler's creating a deep state within the SEC?
Kind of. Yeah. But, you know, from my perspective, as somebody who believes that what Gensler has done has put the US behind, I feel like Atkins will help make the country competitive again, which is why I keep seeing a lot of tweets from people saying, I'm moving to New York or whatever. And that makes me happy. So.
Okay, last story I want to get through is there seems to be, alongside all the Dino coins pumping and all these positive regulatory news for crypto, there's a little bit of an NFT revival going on, which is, I think, a little bit, again, in the spirit of things coming out of left field that are reviving from the last cycle. So punks, for example, are up 66% in the last 30 days in terms of the floor price.
In Ether terms?
I think that's in dollar terms, but I should probably verify that. Let me see if I can give you the answer to that. I believe this in dollar terms. In dollar terms, it's up 67%. So obviously in Ether terms, that's less. So, okay, it's the floor price right now for CryptoPunks is 42 ETH. For Bored Apes is 21 ETH, which is up about 88% in the last 30 days.
This is Ether terms. The Punk's floor price November 9th was 26 ETH. Now it's 42 ETH.
Oh, wow.
Oh, these are priced in Ether terms. Oh, I see. Sorry, my bad. These are up in Ether terms. These are up in Ether terms, which is even more in dollar terms. So add another, 50-ish% to that in dollar terms. So floor price now for CryptoPunk is 170K. For a Bored Ape, it's 85K. For a Pudgy Penguin, it's 75K. So we now have very significant rebound. Pudgy Penguins are up 120% over the last 30 days. And we've seen volumes also increase pretty dramatically. 7-day volume is up about 50%. 24-hour volume is up about 89%. Although, interestingly, the total amount of addresses that we see trading have not changed that much. But we might be seeing a little bit of a NFT renaissance. So, Robert, as our crypto connoisseur, what's your take on what's going on right now in the NFT market? And secondly, did you hold?
So I've held my NFTs. That being said, I've not been following the NFT market for the last couple months at all. So like all the numbers you're quoting to me are news to me. This is not an area I'm spending any research or monitoring time. So how
does one actually manage as an OG NFT person? How do you where do you go to check what's going on with your NFT collection?
I go to CryptoPunks.app as my first stop usually. Just to check out the CryptoPunk market as a barometer for everything else. When I was checking things, I mean, honestly, I would just hop on Blur. I haven't used Blur in a hilariously long time, but I'd hop on Blur and go to their overview page and sort by whatever market cap or something like that. Because that would always show the most important collections, from punks to apes to doodles, pretty much all the top collections are, sortable by market cap, penguins, whatever. And so that's a pretty good overview. And that was always how I did it. There's, I'm sure, more sophisticated tools. I think Nansen developed some stuff, but for me, it'd be just going on the websites and, monitoring.
So, okay. How are you feeling your NFT collection being raised from the dead?
This is not something that I spend much time looking at. So,
okay.
I will if I start seeing headlines on Bloomberg about NFTs going wild, I'll be ooh, let me actually spend some time looking at this and seeing if I want to sell some stuff and all of that. But until that point, I have too many things to focus on as is. I can't spend time.
Okay, but what is it okay, I have my wine cellar and I just have them there forever? Is that your attitude towards NFTs? Or is it, I'm waiting for the right moment to sell these into a rally?
Yeah, I mean, it's funny because, I think even a wine collector would be willing to part with pieces of their collection at the right price, right? That's just, how it works. So you can acquire more wine at, the price you want. So I think there's definitely things I would sell, but for the most part, I'm generally in the mindset of what difference does another 5 years make?
Fair enough.
You might age more finely with time. So
Sure. Yeah. Tom, I know you're a world famous Milady's collector. How are you looking at your collection?
Yeah, Tom, you're one of the top.
They're looking great. You guys want to? I'm a top Milady.
I think so.
Oh, I'll take. I got my Milady coaster
Oh,
right
yeah,
here.
wow.
Copper
Yeah.
Lady coaster.
Product placement on the chopping block.
Yeah,
That is
that's
a
there you go.
scary looking
Do you see
coaster.
the chopping block that XYZ?
You know what do you mean? It's cute. Look at those eyes. You don't think it's
That
cute?
is not. That is
It's
not
scary
really cute.
looking.
It looks like a cookie.
A cookie. I don't know. It's weird there's such a dispersion. Like, okay, obviously, like penguins, they announced with the chain and Pengu, which is also weird that it's a token on Solana, but that's a whole other thing. I also thought they're doing an FTT holder airdrop, which I don't know what that is all about. Weird
Wait,
token lines
really?
in general.
There's some
yes,
cabal
it's
stuff
part of the
going on with
allocation.
that airdrop.
Yeah.
I don't know
Wait,
what's
there are
happening
still
there.
people who hold their FTT.
Well, they're getting
Clearly.
Pengu, so
Somebody
yeah.
has to hold it, otherwise, yeah, like the token didn't go away, so obviously
Oh
someone
my
holds it.
god.
So I understand why penguins are pumping. They're announcing exciting stuff. The other stuff feels kind of random. It's like why is the other stuff pumping? I don't quite know. Maybe it's kind of excess liquidity from these other assets kind of spilling back into NFTs. Like, if you look at the actual volume chart, it kind of reminds me of the meme with like the guy in like third place who's like pouring champagne on himself, and it's like, it's like that where it's like, okay, you got this big like 2021,
I'm going
and
to
then it's like,
superimpose that on the screen here.
yeah. And so it's like, all right, yeah, vibe's going up a little bit, but in relative terms, it's still very small. So I don't know. It feels strange. It doesn't feel as sort of overly euphoric, broad based as I think a lot of the other crypto asset rallies.
Is it not part of that Dino Coin recovery that people woke up from the last cycle and they were like, oh, I remember these. Oh, they're really cheap now. I guess I'll buy a few.
If that's true, I think hash masks would be pumping, but maybe people are going back on.
I mean, hash
OpenSea
mask
or
was
Blur or
like
something.
really like one tiny little sliver of a moment.
I don't know.
I mean, because all the more key stuff, right? It's like it's punks and it's apes that are doing really well. So that would make sense. That there's people who woke up and are just like, oh yeah, I remember these, and I've got some XRP gains. Might as well roll them over.
Yeah, I mean, Hasib, I agree with you. I think it's people getting more speculative. Like they have some gains from whatever BTC, Sol, now ETH, and then they're putting it into things that are more speculative. Oh, you guys, I just was wondering, now that Trump is coming in, and now that we might get like, I don't know, for instance, Hester Purse's token safe harbor and stuff like that, and we have all these like new startups about token launches and stuff. Like, I feel like part of the reason meme coins did well is because, and no offense to you, hopefully you won't take this badly, but I think people, they're sick of VC coins, and so I do feel like that was like part of the reason for meme coins doing well. So I wondered, like, what do you think will happen to token launches once the Trump administration comes in?
Okay. So first of all, I want to respond to that because I just had a tweet storm exactly about this, which is that, I mean, I've been saying this on the show for a while that I reject this like revolt of the public framing for meme coins. But I think a large part of the reason why it doesn't make, like why it really doesn't make sense, and it's very obvious now that it doesn't make sense, is that I think the right way to understand meme coins is that meme coins are basically a game. They are actually like, in a way, the best success that we have out of GameFi. Once upon a time, we thought GameFi meant that you take an MMORPG and you slap a token on it, and you can move your sword from this game to that game or some shit.
I mean,
like
that still sounds awesome. Okay, I want that.
Does it? Because I don't see
I
a
don't
lot
even
of people
play
playing
games,
those.
and I like that idea.
Yeah, I will say, yeah, nobody's playing any of the things where you can export your swords from game to game. So I'll say you guys are full of shit. You will not play that game.
No, I think it will
but
happen someday. It just
Yeah,
hasn't
it's
yet.
a cool
It
game.
has already happened. It has already happened.
No, it has. Not with a cool game.
Go look at all of. Okay, yes, it's hard to make cool games. It's hard to make games that are fun. But the idea of games with NFTs that are the assets that you can export and take to other places, that has been tried. It is not the thing that makes a game successful. The thing that I think did really work in GameFi is meme coin trading. And meme coin trading, what is it a simulation of? It is a simulation of crypto trading. But crypto trading, as crypto became more developed, became lower volatility. The assets became more mature. It's a lot less fun than it was in 2017, where 2017 it was just like a raucous good time. You just you don't even read the white paper. You just like look at the website. You're like, oh, this looks great. This looks like it's the future. Looks like a strong team. I'm going to ape into this thing. And now in 2023, 2024. Everything is a lot more mature. You have to like go do a bunch of research. You have to go on Nansen. You have to go on, Artemis and look at stats. And it's just like, it's like stock analysis. It's actually kind of boring and slow and just requires a lot more work that's kind of busy work from the perspective of the average person. Meme coin trading takes what's fun about crypto trading, and it just like turns it up to 11. And it's super simple. It's super high octane, extremely high volatility. It's like all the stuff that's fun about crypto trading with none of the annoying stuff of actually doing research. And so what you saw was that during during August, September, when we were kind of in the doldrums where there was low volatility and prices were just kind of drooping downwards, meme coin trading was about 25% of total volumes on Binance. Today, it's about 10% of total volumes on Binance, which makes sense because crypto trading is fun again. Because volatility is way up. Any random token can pump for any reason. It's back to that same frenetic energy that people associate with crypto trading, which is why they're back and why retail is having a ball again. And so the idea that like, oh, there was a paradigm shift. And now people no longer like VC coins. They don't like tech coins, and now they only like meme coins. I just think that was wrong. I think what people were doing was they enjoyed the game of trading random tokens, which is what meme coins fundamentally represent. But that game, one, on a relative basis, is less attractive when the normal coins are doing that anyway, and they're bigger, and there is a fundamental story behind them. But second is that all of the meme coin stuff actually makes the layer one stuff more valuable. Like Solana is more valuable because there's meme coins on it, right? Optimism, which is, the super chain, which has base on it, the demand for a lot of stuff. Like if you look at AVAX, you look at Aptos, a lot of stuff happening on there is meme coins. And meme coins drive demand for the underlying layer ones, and they make them more valuable. Uniswap, Radium, they all became more valuable because they service the meme coin economy. So the idea, it's like arguing that, oh, well, a lot of people playing Axie Infinity, doesn't that drive value away from all the VC coins and all the layer one? Like, no, it's the opposite. This is what's giving people demand to come on these blockchains and use these things in the first place. So that's why I reject this contrast. And I do think that meme coins right now, they're at a lull. Meme coins immediately after Trump got elected, they rallied like crazy. Now they're actually dragging. Meme coins, if you just look at what's pumped the most in the last 30 days, it's actually mostly non-meme coins that have done the best. I think when we go to a lower volatility world, meme coins will come back and they'll start to become more attractive on a relative basis. But right now, I think that's a much better explanation for what you're seeing with respect to meme coins and non-meme coins.
Okay, but then leaving aside the question of VC coins versus meme coins, what do you think of ICOs versus airdrops? Do you think airdrops will become less of a thing?
Okay, where is this ICO talk coming from? Who is talking about ICOs? I'm like,
a lot of people are talking about ICOs.
I see this in random corner. I'm like, dude, ICOs, Trump is not going to bring back ICOs. Like, where is this coming from?
Well, I was just saying, like, Hester Peirce's safe harbor token proposal, or
the safe harbor token proposal is
whatever.
not like you can ICO. That is absolutely not what that says.
Well, I mean, it does
I agree with
provide.
Steve.
It does provide a way in which people can fundraise for tokens. Isn't that the thing? It's like you have a three-year period after launch in which you can decentralize, and they're going to figure out what the
period
budget
after launch for your token to not be considered an unregistered security.
Yeah.
That is not the same thing as you can sell this token to random retail investors.
So okay, it is true. I don't remember
the
all
ICO bubble. Yeah, the ICO bubble
Yeah,
was
but-
such a fucking disaster. There's no way that
there's,
anybody
like,
from this SEC is going to replay that.
There's a bunch of new. So there's Legion. There's I forget. But there's a bunch of new things that are working on the ICO thing. Like I forget. Kobe has one. I don't know.
Yeah, Echo, but Echo's not an ICO platform. I mean, it's like accredited investors. You got KYC, and then you get an allocation. It's not like a sort of bonanza.
It was more like a syndicate type thing or something.
Yeah, I think Infinex is kind of experimenting in this area by selling these NFTs, and the NFTs can eventually potentially could convert into some tokens. So I would say that the thing that is like most ICO-like, but is still a far cry from like 2017. It's more, how do we sort of give the public access to be able to buy this thing and put money in early, but like it's also like a live functioning product that's not give me a bunch of money, I'll go build Uber on a blockchain.
Yeah. So let's reiterate what ICOs were, because I think it's important for people to understand. There's a lot of people who've come into the industry since like 2020 or 2022, and they hear about ICOs and they were like, oh, that sounds so great. It must have been so democratic, and everybody was able to get rich together, and the VCs didn't get in early. So what an ICO was in 2017 was some people had an idea of a thing they were going to build, and they just put on a website and they said, give us a bunch of money and we promise we're going to build it and we're going to make the value accrue to this token. And they raised shitloads of money from random people on the internet, and most people never delivered anything because of course they wouldn't. Why would you get a bunch of money up front with no protections, no covenants, no legal contracts, and just raise a bunch of money from random people who don't know, you don't know who they are and they don't know who you are. And then you eventually have to like do a bunch of work and give them something back that's valuable. No funding for anything has ever worked that way. Obviously that's bad. That's a bad idea. Okay.
I mean,
now,
it worked for Ethereum.
It did work for Ethereum at a time when this concept barely existed. Ethereum was the first major ICO. And then there were a few early Ethereum ICOs like Augur and things like that that actually did end up building their products. But when it became popularized and people learned that, oh, I can raise a bunch of money by just having any batshit crazy idea, throwing out a white paper and having a contract that people can send money to, then you just had all sorts of grifters and scammers and people lost shitloads of money.
Yeah, by the way, if you want to know more, read my book. It's all about this.
Okay, there you go. So all that is to say, I think what may come back, right? If you look right now, for example, at things like CoinList or TokenSoft, right, which are these accredited investor, you can invest in a pre-launch project that has a bunch of disclosures and documentation about what they're doing, and there's some legal contracts that exist between the buyers and the sellers. These things fell out of favor under the SEC or under this SEC because they were perceived as, even though these are formally legal, they may make it look like you're advertising to US investors, you're soliciting investors, you're creating more of a US nexus, and it's just dangerous to like have all these US investors on your cap table. So just don't do that, right? It's not that it's explicitly illegal or it's obvious why you shouldn't do this, but people just avoided it for general risk avoidance, okay? This kind of thing probably will come back and will become much more normalized, is that, yeah, sell to accredited investors, right? But that's why we have accredited investor laws, is so that people are not taking advantage of grandmas or other people who just clearly are not sophisticated enough to be making investments into early stage projects because they don't even understand what they're supposed to be diligencing. What disclosures are they supposed to look for? What, like if you're selling a token to my dad, okay, I will say, fuck you. Like, absolutely not. But like, if my dad wants to invest in something, he should be asking me. He should not be directly going to anybody who's just selling him something on the internet. And that's what accredited investor, I mean, they're obviously not perfect and they're moving towards this. Or he should
get it for free because it's an airdrop for using some.
Sure, exactly. Airdrops, absolutely. I think airdrops to US investors, that is coming. But the idea that we're going back to ICOs and that's how tokens are going to get distributed to retail, if that's what you mean by ICOs, like, yeah, no fucking way. Absolutely not.
Well,
and for good reason.
I mean, yeah, for some reason, you're right. I don't have like exact facts on how this might change. I have just perceived in different ways that, like, first of all, perspectives on this are changing, and like potential, the perspective of regulators might be changing. But I don't really know, so we'll have to see.
I mean, look, Paul Atkins is not a like burn it down, like fuck it. Let's just make it a total anarchy.
Yeah, no, I don't think it would be like the 2017, 2018 era of ICOs at all. That's not what I'm saying.
Right. And the case law there and the rules are pretty clear. So creating a safe harbor says that there's a way for your token to not be a security, and you don't have to register. And ideally, I think what we'd see from this SEC, to be clear, is not, okay, they ignore crypto and they let it be the Wild West. What people are excited about is that there will be rules. And the rules will be clearly written of here's what you need to do in order to be a decentralized network and not be a security. And if you are in years 1 through 3, still decentralizing, here's the parameters around which it's okay. And here's what you can do and can't do while you're in this playpen, right? But probably one of the things that you can't do is just do a fucking ICO. That is one of the things that's probably not on the list of in the safe harbor rules.
Yeah. And I wasn't saying
I don't know.
Exactly
I haven't seen the rules. Right. But that's the shape of it, is that we're not going to come at you and sue you and try to drag you to jail because you launched a token and you didn't register with the SEC, right? That's what the safe harbor rule is supposed to be for, not, great, now you can just do whatever you want.
Yes.
So anyway,
I
we're over time.
Yes.
We're over time.
By the way, last
so
2-second factoid that I think people might be interested in. When I did buy those initial Bitcoins, they were in the $200 range, and the Ether, I'm pretty sure I bought at $7. So people might be impressed that I forwent all that, or gave up all that for whatever. But anyway.
Okay. I appreciate you establishing your creds on the platform. All right. We're going to wrap. Thanks, everybody. See you all
Yes.
next week.
Thanks, everyone.
Thanks. Bye.